We're back. Tasty Crypto Show. I'm Ryan Grace. He's Frank Kaberna. The coins are ripping.
Coins are ripping. You told me the coins were taking a breather last week.
I was wrong, Frank. I'm sorry. I know we were looking for that pullback and haven't really seen much of a pullback here.
Always a good problem to have is you wanted more than you got, but you got some and it's doing well.
Yes. Yeah, we can't get too greedy.
Can't get too greedy. Hopefully, yeah. I don't know what to hope for at this point because I've got some coins, Ryan, but not enough. If we just rally to 55 in Bitcoin and kind of sit here into perpetuity, but I don't think that's going to happen.
You missed it, Frank.
I missed
the
it.
move.
Okay.
No.
All right.
I think you'll get an opportunity here. Let's jump into our slides. We've got a lot that we're going to talk about. Obviously, going to talk about the market here a little bit because we are getting that. What's become, I guess, normal, I suppose, compared to where we were maybe 6-9 months ago. Got about a 5% move higher here in Bitcoin, and you're seeing that expressed across alts. Ethereum has not just caught up, but outperformed recently. So look at the last month in there, Bitcoin up 36%, Ethereum up 44%. And you can see the last 3 months as well. That bullish trend continues.
Yeah.
What do you make of this, Frank?
So it's interesting. I ask you this every time anything like this happens. Bitcoin moves up or down by more than 5%. And the first thing I do is say, Ryan, why is this happening? Which, of course, has happened to me so many times in every other asset class on the planet. Everyone will be like, oh, Frank, what's going on? Natural gas is getting, annihilated. It's down 60% in the last 6 months. What's happening? And of course, if you've been around markets for a long time, you kind of know the market's happening. It's kind of like being like, oh, I'm in my 70s or 80s and I've got like some joint pain or and it's like, what's happening? And it's like, you have a body and stuff happens. Getting or more old. Aptly, like I worked out too much last week and now I'm like sore. And it's like, why is this happening to me? And it's like, you have an organism here, one that moves off of supply and demand, and you have here a very volatile one. And so, you shot to me a very apt, there's not maybe something happening. It's not like, Apple, they're selling the most iPhones ever. It's like Bitcoin is selling the most, their version of an iPhone ever. It's just, this is a volatile asset and it's seeing that volatility to the upside. So you told me this is kind of, it's becoming a normal thing.
Yeah, I think so. I mean, when you look at the move here today, 5%, not out of the ordinary at all. You can see we've continued to trend higher. Some of those temporary dips have been bought. If you do a quick Google search, you'll probably see that we took out a resistance level. We're holding above 50. People are now looking at, let's call it 75, new all-time highs. Do we run there? Possibly. I don't think that it's going to happen overnight, obviously. But you've seen a lot of speculation, and as we've discussed, we've had that pretty positive flow or that backdrop when we look at what's happening with the ETFs. So this continues to trend higher. I would argue that the S&P, other risk assets, are just shy of all-time highs as well. So it's been a pretty bullish environment for one reason or the other. But when I do look at the volatility, Frank, to your point, this isn't out of the ordinary. This is to be expected. It is just how the market is trading. And so we got a 57% vol on Bitcoin. Ethereum is back above it by about 5 points.
Yeah, wow.
Kind of what we've typically seen in the past where ETH trades at a higher vol. But at this point, here are your ranges. We have no idea what's going to happen, but those ranges continue to build at higher and higher levels.
Sure.
When we model out that volatility, you get higher lows. So bullish trend continues in there. And I would argue, if we really see this move extend in ETH, 3,500 would probably be my short-term target.
Gotcha. Yeah, and I think that you very aptly put that around the upside of the weekly expected move for something like this. It's worth noting, of course, this can happen in both directions. And also, if you look at a monthly chart, it looks like it's been all upside for the last, almost at this point, almost a year, right? It looks like all upside. In the short term, there have been plenty of days where, one, Bitcoin has moved lower by more than $1,000. Two, Bitcoin has been higher by 1,000, 1,500, 2K, and has come all the way back to unchanged on the day. There have been plenty of downside big moves as well. And so, yes, are we broadly seeing this volatility in the upside direction? Yes. Does it have to go in that direction continually? Absolutely not. But yeah, I mean, it's a hell of a bullish trend that we've been caught up in for Bitcoin. And yeah, I wanted to take a look at this. What are you seeing here? Because this feels like one of the first, and it seems like it's only been the last couple of weeks here, Ryan, that ETH is one. It led the way. This, until midway through today, this was primarily an ETH move, right?
Yeah, we've seen ETH play catch up a little bit. You've got that follow through now in Bitcoin here today, to your point. But when I look at that ratio, this is Ethereum priced in Bitcoin, not in territory we haven't been recently, so we'll see if we can continue this move, Frank. I thought that this was an interesting spot where you might get long ETH. There is that narrative around potentially Ethereum ETF approvals. You've got institutional adoption there, and apologies for the pop-up. But when I look at this, nothing's really changed. I think it still is pretty bearish, relatively speaking, when we look at just the trend that we've been in. So I would want to see a much bigger move to get me to think that you're really going to start to see this run. I guess point being, I think it's still really early. Sure. There's nothing that is really standing out to me one way or the other. I think there's definitely opportunities to buy dips. That's what I'll be looking to do. And I think we're at the beginning of this cycle still.
And this is the super nice thing, and maybe a good transition for. I know you want to talk about Solana as well. What I really am growing to love about the crypto asset class in its totality, and I know we're going to explore a lot on this show, is it doesn't have to be a case of, okay, I bought however much money in Bitcoin, $1,000 or whatever in Bitcoin, and now it's like, oh, ETH looks like it's kind of trending higher. Maybe it's more, oh, well, I need to, now buy a bunch of ETH, and I need to come up with $1,000 in cash to put into ETH. You could trade them against each other.
Yeah.
You can use other products, like I know we're going to talk about on this program, similar to options that kind of get you out of your Bitcoin position into your ETH position as those markets move in a certain direction. And I'm always really excited when you bring up some of those, Bitcoin versus ETH, and also other products that we'll be looking at, because you can sell out of your Bitcoin and buy into ETH without necessarily having to convert to cash and do these different things, or just find more cash to buy your ETH because you can never sell your Bitcoin. I'm hoping there's a period a few years ago, right, where a lot of people were thinking that ETH would maybe challenge Bitcoin's price, and obviously now it's pretty far away.
Yeah, that I believe was the view at one point, the flippening. We'll see if that still plays out. But in terms of just extrapolating prices, right, if we look at where this ratio is, about 0.05 of a Bitcoin is where ETH is trading or has been trading. It's been as high as almost 1/10. If you believe that, name your price target, but Bitcoin can get to 100,000, you can then come up with an implied price if we start to see those ratios hold. There's obviously a scenario where ETH could outperform on a relative basis too. So again, I think it's still really early. We just got the Bitcoin ETFs. The world, in the institutional sense, in the financialized sense, is waking up to Ethereum. I don't think, again, we're not getting those texts or those calls from friends and family just yet. So that's probably the ultimate indicator, right? So I don't think we're there yet. It's been around for a long time. but you are just now starting to see people wake up to what's happening. I think the next thing everybody's going to be looking at is once you learn about Ethereum, you start to understand the technology a little bit better. People are going to look at L2s. I think another space in terms of investment that it also might be relatively early in. That said, I want to talk a little bit about DeFi here today, Frank. When you've been on the show, we've kind of called this like the, I suppose, the starter kit. Where do I start trading crypto? The idea behind having you come on here was not only just to look at markets, but for you to take it wherever you want to go. I know you're probably newer to crypto than I am, so I'll be the guide to the extent that I can guide anyone anywhere. But any questions that you have, you're going to ask them on the show. And one of the things that we've talked about previously was trying to answer this question around, what do I do with my crypto?
Sure.
Like, what do you do with this stuff, right? And so I want to address some of that here today.
So stupid, but that is created for this, right?
Well, it's what's fun about it, in my opinion. There's utility here. It's not just about buying something, holding it, and hoping it goes up. In some ways, it's about an evolution of financial products and services.
Sure.
Maybe I'd go so far as to say an evolution of the financial system. There's an argument there. But point being, yeah, you could do a lot more with this than just buy and hold. You could participate in DeFi. So we're going to talk about that here today.
And thankfully, yes, Frank is, you put it very kindly, Frank is here for the Crypto for Dummies segment, which we'll be doing weekly. And I'm really excited about this, and I think that I'm a good candidate for this, because I've explored almost all the products that a retail everyday person could explore when it comes to here's what you can do with your Apple stock, for example. And that is a matter of, futures and options and very advanced option strategies, as many things you could do with the Apple stock that you bought or the S&P 500 that you own. And I'm super excited to break this open because I've been led to believe that this DeFi space is the vanilla options look very vanilla compared to everything else that you can do with your Bitcoin or your ETH to essentially make it work for you, or like we like to joke, make it dance. I want
to make my money move, right?
I want to make my money move and in the right direction, obviously. But everything comes with a risk and reward. And I'm just same with anybody who's learned options on stock or whatever. It's like, yeah, we're not gonna make money in everything that we try out, obviously. But I'm excited to learn about it and to actually do it. That's a big thing of Tasty is always. You do you learn by doing the thing, Ryan, and I'm excited to do it. So what even I don't even know what DeFi is. I have no clue what it is.
Let's start there. I've got the DeFi intro slide here for you, really high level. And I would point out, I don't think you're not a dummy, obviously, Frank. The concept, yes, sure, is along the lines of those books, getting started. We did Trading for Newbies. We've done Where Do I Start? We've had all sorts of different shows that hopefully help people onboard into the space, specifically when we look at options and futures trading. This is really the same thing. This is hopefully going to be content that is helpful, at the very least, to somebody that's interested in getting in this space, assuming you have a little bit of background, kind of know what we're talking about. We'll try to remove some of the jargon, but know what we're talking about when we're discussing cryptocurrency, Bitcoin, ETH, and others. And maybe you're on the fence, but you're aware that there's these, what I'll call on-chain opportunities, and you're interested in learning how they work. I'm not going to present this as it's a recommendation to do one thing or another, but I think that people should definitely be aware of everything that's happening and how, if you choose to, you can participate. So let's kick it off a little bit of intro, talk about high level what DeFi encompasses. I can give you kind of my view on this as well. But it's really a concept of a financial system that's an alternative system to what we have today. I wouldn't necessarily say there's anything terribly wrong. I mean, there's flaws in any sort of system. There's weaknesses. You could make a strong argument around some of the weaknesses in our existing financial system.
Sure.
I don't look at this, though, as one is better than the other. There's a lot of things that at this stage aren't even comparable between the two. But I look at this as potentially a technological evolution of a financial system, an alternative financial system. I think both can coexist to an extent. And it's a financial system that runs on a blockchain. It's really the best way to look at this. And why that's important to people, regardless of how it technically works, it's important because there's no need for any intermediation.
Gotcha.
There are protocols, there's platforms, there's applications, there's software you interact with, things that you use. It facilitates the process, but there's no bank that you necessarily have to go to. There's no one that you have to ask permission from to be able to do something. That's how it works today. Will that change with regulation? It's possible.
Sure.
But that's the idea, at least. And through that process, you can trade. You can kind of be your own bank. You can lend. You can borrow. You can stake. You can participate in a lot of different ways. And you do this all through peer-to-peer networks. That's DeFi, my friend.
That makes a lot of sense. And I've tangentially come across some of those ideas. But what really stood out in your portrayal of this is like it almost seems like lossless, right? In terms of like anything that goes into it, you have $100 and you come to the market, you have 100 USD worth of ETH, and you start doing these other things. And yeah, there are maybe fees involved or commissions involved, or the biggest price you pay in a lot of senses, I'm sure, as this stuff is so new, is liquidity. And it's not pretending necessarily like there's no commissions or anything like that around some of these DeFi products, but it's very transparent where all of the money, all of your $100 goes to and how it grows or loses, where a lot of times, until recently with certain, stock brokerages, it's been a little bit of a black box of just like, I put my money in the thing, and there are these fees and things that are happening to my account, and I don't really know what's going on. But this seems like it's really like, since it is peer-to-peer, it's this kind of like lossless, very transparent thing where you see where all the money's going, and you see very transparently how you can make money with your money.
And I think that's attractive to a lot of people. It's certainly a feature of blockchain technology. It's a feature of these protocols of DeFi. You think about how opaque, to your point, the financial system is today. You don't really know. In some cases, these products might be black boxes, so to speak. When we had the great financial crisis, we can go back and nobody knew who owned what, where the risk had materialized, who was still solvent in that case. I don't know if a blockchain-based system would necessarily have solved some of those problems, possibly, but this is something that is definitely much more transparent than a more centralized financial system where you have records that maybe aren't viewable or available to everyone at all times. This is all on chain. And so that definitely is something that attracts me to it. I think is interesting. You can look at any one of these protocols and really drill down into how they work. Yeah. And then you can make a decision as to whether or not you want to interact with that, or might be a situation where you find that there's a flaw in what you're looking at.
Perfect example is, there very well could be a crash or some kind of crisis for whatever, or like I say, you could be entering a lower liquidity type product that there's counterparty risk on. But if something does happen, you see very clearly what has happened. Whereas, you could watch The Big Short a million times, and there's a lot of parts that I'm like, I don't know what the hell happened in that part of this whole story. And in a lot of cases, no one actually knows. And a lot of the confusion is what creates or exacerbates some of those crises. That's a cool piece and a great example.
Exactly. And you have seen, it's not to say that there isn't risk here. There's obviously risk in
100%.
everything. But you've seen a lot of stability across this space as well. If you go back over the last couple of years, we look at the FTX debacle, you look at what happened in the industry around kind of these centralized counterparties that were lending out people's assets, and everything was kind of jumbled together. They've all since filed for bankruptcy. You've seen a lot of these things fail. DeFi didn't fail, kept running during that period of time throughout all the volatility. So that is important to point out. But I want to talk about a couple different use cases. We might not have time on the show today to connect to some of these protocols, but I want to give you an idea of what's available, what's out there, some of the things that you can do. We are eventually going to connect to them. It's not something you necessarily trade per se, but we're going to use the protocols. We're going to stake some of our positions, try to create liquidity pools, walk through all of that, some fun stuff. But a few different DeFi use cases, just so everybody understands kind of what we're talking about. Let's make it real for a second. The three big ones that come to mind are swaps, and that's just trading on chain. You're going to use a decentralized exchange. So instead of going to a brokerage firm that's going to introduce you to a lot of other technology, to the exchange mechanism and facilitate that whole process, you're basically plugging directly into the exchange as an individual.
Wow.
Uniswap is the biggest. We'll talk about that in a second. But it uses something called an automated market maker. There's no intermediary involved. You see what the price is, and you're a taker of that price. It's not perfect, so maybe in some ways rudimentary relative to how other things might exist today that are centralized. But you can see how, in theory, it creates this layer of liquidity for just about anything.
100%.
Right? There's a process for this. It hasn't fully evolved yet today, but I think decentralized exchange is going to play a huge role in on-chain finance, on-chain opportunities going forward. And you can actually swap tokens using a DEX or decentralized exchange directly in the tastycrypto wallet app.
That's awesome.
So
yeah,
we start to utilize some of that.
Like a lot of these use cases, I'm sure, a long game kind of thing, right? Where it's like you set this thing up and swaps. And I'm going to do this a lot, and so hopefully no one gets offended, especially in the crypto world, where I'm going to analogize to something that's in traditional finance, essentially kind of like a futures market. These swaps markets are in a lot of ways. It's for more trade-based uses, right?
Well, I would even think of it as I have 100 shares of a stock and I want to sell it for dollars. Mm-hmm. This would, in theory, allow you to do that. If I have X amount of whatever the cryptocurrency is, let's say it's Ethereum, and I want to swap it into US dollar token, I'm going from one token to another directly on the blockchain, and my resulting balance at my wallet address is in that new token.
Oh, so more of like a spot market.
This is a spot market that's decentralized. I would think about it as, and I think this was in their S1, we'll have to double check, but I would think about it as a big competitor to a centralized exchange mechanism.
Gotcha.
So Uniswap is arguably a competitor to Coinbase or to any other global central exchange.
And it's not a matter of, a brokerage or some intermediary essentially saying, you've got this position, but we've got a bunch of positions that we're kind of managing, and yours is one of them. You're tapping directly into it.
If you want to trade, you connect your wallet. Your wallet has a balance of tokens in it. If you want to swap those tokens for another token using this mechanism, you can do that.
Very cool.
A couple clicks of some buttons and you're good to go, Frank.
Yeah, and the liquidity, like to your point, of course you couldn't ask for the liquidity to be there inside of a decade that these things are being created, compared to the New York Stock Exchange that's been around for decades, obviously, but it is a long game kind of thing where it's so transparent. You tap right into it.
And with some of those tools that we've talked about on the show a couple weeks ago, you can actually see what activity, to your point about transparency, is happening at these exchanges, how much revenue is being generated, how much value is locked in the exchanges, the volumes, et cetera. Anything that you want to see, it's available to look into. So that's token swapping, decentralized exchange. I think, to me, that's one of the most interesting use cases in DeFi today. There's obviously borrowing and lending. We'll talk about that later. Decentralized staking is another really interesting use case. So as long as you have a proof of stake consensus mechanism, there's a lot of different ways that through various central entities, you can stake your crypto and you can participate in securing the network. You can generate crypto rewards. So if I stake ETH, I can generate ETH in reward form. You can actually do this on your own with your wallet. You do not need to use a central provider. You can go to a decentralized protocol and you pool your staked assets, receive rewards with a bunch of others. They're delegated to different validators.
This is one that the DeFi, this crypto space in general, has made so easy for me to understand from a broad level, because I just look at it, the reward part of it, right? It's like, okay, I've got $100 worth of ETH, If I stake it, I can get, let's say, 3% annually, and they show you the rewards on a daily basis. Very transparent. It's very cool. I don't understand at all, though, since it's been so simple, how it actually works, why they're paying me the 3%, or Polkadot. Some of them, they'll pay you like 9, 10, 11%. Why are they paying me? I don't understand.
Yeah, so what you are receiving is, in effect, rewards for validating transactions, for securing the actual network, participating in the security. On one hand, with Bitcoin, you have proof of work. You have Bitcoin miners. They're all racing to solve basically the same math problem. And whoever solves it first and is able to add those blocks and verify those transactions is going to receive Bitcoin as a reward. We have the halving upcoming, so the amount of Bitcoin that you receive for that process gets cut in half, but that's proof of work. Proof of stake, instead of miners, you have validators, and they have an economic incentive to be good actors. And so in this case, instead of doing this on your own, you can pool your capital together, goes to a validator, the validator validates transactions, receives rewards, passes some of that reward on to you for staking your ETH. For securing the network. And you can do that through central counterparties, and you can also do that in a decentralized manner. This is DeFi staking. There's a liquidity component to it, which we'll discuss on the next show because we're going to run out of time here. But that's something that we're going to jump into.
Cool.
And then the final use case that we're just going to hit on today, and we will come back to this for sure and start to interact with these protocols, but these are liquidity pools. And this is where you're going to go to a decentralized exchange. So this helps to facilitate the first thing on that list, the swapping of tokens. The exchange, there needs to be liquidity for that to occur. You can participate almost as a market maker in these decentralized exchanges. Not only can you use it to swap, but you can also go in and provide liquidity. That liquidity facilitates the trading activity. And instead of the fee that's being charged on a per trade basis, because there are still fees to make this possible. There has to be an economic incentive. But those fees, instead of going to a single company, a brokerage firm, a bank, or the protocol itself, those fees are paid out to all of the liquidity providers. So you generate a return on the liquidity you're providing because you're taking risk. We'll walk through all of that in some of our upcoming shows. I think liquidity pools are probably the most fascinating, going back to why I think decentralized exchange is interesting. But we'll talk about all of that next week.
This is absolutely unbelievable. Like I can't, I could sit here for another hour and talk about all three of those items for honestly hours and hours, and I'm so excited for next week. But in those three processes, you could see, I've been around traditional finance for almost a decade now. You've been around for even longer, and we've seen every part of it. Everything from prop trading, high frequency trading, brokerage, retail, like all this different stuff. And in those three pieces, retail, everyday people are taking part in the whole organism.
Yeah,
which is
it's pretty
which
cool.
is unheard of.
It's a different way to participate. I've been doing it for a couple of years. We're going to walk through how to connect, how to stake, to use that term, or just how to provide liquidity, more so, what the risks are, how it all works here next week. So that's going to do it for our show. But Frank, looking forward to having you back on next Monday. This week on Wednesday, Mad Mike will be here. We're going to talk about what's going on with AI and crypto. How are these things related? The relationship.
What's going on with AI and crypto?
AI and crypto. You're going to have to tune in next Wednesday to find out. We're going to talk about the concept at large, some of the ways that you might be able to participate in that, and maybe dig into kind of what's happening there in the space, because it is fascinating and it's obviously aligned with everything else that we see in equity markets with NVIDIA, with the AI craze that's ongoing. But we'll be back on Wednesday for that. Frank and I'll be back next Monday for Crypto Starter Kit. I suppose that's our kind of working title.
Crypto for Dummies.
Crypto for Dummies.
For dumb redheaded
Crypto,
guys.
Crypto Starter Kit next week. We're going to start to dig into decentralized exchange, connect to Uniswap, and show you guys how to use that with the Tasty Crypto wallet. But until then, I'm Ryan.
I'm Frank.
Thanks for watching.